Welcome to XRP Pro Ledger, and today we are going deep on something that most people in this community are completely overlooking while they watch the Senate vote count. The institutional infrastructure that makes XRP and RLUSD the center of the next generation of financial markets is not being built in Washington. It is being built in Chicago, in New York, in San Francisco, and it is already live. And I want you to stay with me through this entire breakdown because at the 7-minute mark, I am going to show you exactly how 4 separate institutional infrastructure developments, each one individually significant, combine into a picture that tells you something very specific about where the smart money is positioning right now. But before we get into the infrastructure picture, let us talk about why this matters more than most people realize. Every time the community focuses exclusively on the Senate vote count, on the 60-vote math, on the July 4th signing target, it misses something equally important. The regulatory clarity that the Clarity Act delivers is only valuable if there is institutional infrastructure ready to deploy capital the moment that clarity is confirmed. And right now, while the community watches Washington, the infrastructure is being assembled in the background at a pace that most retail participants are not tracking. Let us start with Bitnomial. Bitnomial is a CFTC-regulated derivatives exchange and clearinghouse based in Chicago. And in November of 2025, Bitnomial became the first United States registered derivatives clearing organization to accept RLUSD and XRP as native margin collateral for leveraged perpetuals, futures, and options. Let me be very precise about what that means. A CFTC-regulated clearinghouse, operating under the strictest derivatives oversight framework in the United States, looked at RLUSD and XRP, evaluated them against federal regulatory standards, and approved them as acceptable collateral for institutional leverage positions. This is not a crypto-native exchange deciding to accept crypto collateral. This is a federally regulated clearinghouse with full CFTC oversight making a formal institutional determination that RLUSD and XRP meet the collateral standards required for regulated derivatives markets. That decision did not happen overnight. It happened after months of regulatory review, legal analysis, and compliance validation. And it happened before the Clarity Act cleared committee, before the 15-9 vote, before the July 4th target was even established as a priority. Bitnomial positioned before the clarity arrived because the institutions that understand what is coming do not wait for the headline to position. And the December 2025 CFTC guidance that followed, along with the February 2026 OCC guidance, created the framework for broader brokerage support of this crypto margin model across the institutional market. Bitnomial was not an isolated decision. It was the first domino in a compliance framework that is now expanding across regulated derivatives infrastructure in the United States. Now let us talk about what the SEC did in February 2026, because this is the piece of the institutional picture that most people in this community missed completely. SEC staff issued guidance in February of 2026, allowing broker-dealers to apply a 2% net capital haircut on qualifying payment stablecoins, including assets like RLUSD, when calculating proprietary positions. The previous haircut was 100%. Let me explain what that means in practical terms for institutional capital deployment. Under the old framework, every dollar of RLUSD held on a broker-dealer's balance sheet required a dollar of net capital to be set aside. This made holding RLUSD economically punishing for regulated broker-dealers because the capital cost was prohibitive. Under the new guidance, that haircut drops from 100% to 2%. A broker-dealer that previously needed $100 of net capital for every $100 of RLUSD now needs $2. That is a 98% reduction in the capital cost of holding RLUSD for regulated broker-dealers. Every prime brokerage, every registered investment advisor, every hedge fund that accesses markets through broker-dealers just saw the friction cost of holding RLUSD drop by 98%. That is not a regulatory tweak. That is a structural removal of the most significant institutional barrier to RLUSD adoption in regulated financial markets. And it happened in February of 2026, months before the Clarity Act cleared committee. Now let us talk about Binance, because the exchange integration picture adds another layer to the infrastructure story. Binance Binance integrated RLUSD directly on the XRP Ledger in February of 2026, adding RLUSD/USDT and RLUSD/XRP trading pairs. Binance is the largest crypto exchange by volume in the world. Its decision to natively integrate RLUSD on XRPL means that the deepest liquidity pool in the global crypto market now has direct RLUSD XRP trading infrastructure running on the XRP Ledger. This is not a small exchange adding a new trading pair. This is the world's largest crypto exchange making a structural commitment to RLUSD and XRPL as core infrastructure. And it connects directly to the ODL picture. Ripple's on-demand liquidity system is already operating in over 90 countries, processing cross-border payments using XRP as the bridge asset. Every corridor that Ripple has built, every payment provider that has integrated ODL, is now operating on top of infrastructure that includes Binance RLUSD liquidity, Bitnomial margin acceptance, SEC broker-dealer clarity, and Mastercard settlement testing. The ODL network is not just a payment system. It is the first global payment infrastructure where the regulatory framework, the exchange liquidity, the institutional margin acceptance, and the payment network settlement are all assembling simultaneously. Now let us connect these developments to what Mastercard and Ripple are building together. In November of 2025, Ripple, Mastercard, WebBank, and Gemini announced a pilot program to settle Gemini credit card transactions on the XRP Ledger using RLUSD. Every time a Gemini credit card is swiped, the settlement that happens between Mastercard and WebBank is being processed on the XRP Ledger using RLUSD as a settlement asset. Mastercard processes approximately 25 billion transactions per year. The Gemini credit card pilot is one product on one card, and it is already using the XRP Ledger as its settlement layer. The question is not whether Mastercard will use blockchain for settlement. The question is whether the XRP Ledger is the settlement infrastructure that scales with Mastercard's institutional requirements. And the answer being tested right now in production is yes. Now let us add Ripple Prime and Hyperliquid. In February of 2026, Ripple Prime integrated with Hyperliquid, the decentralized derivatives venue. And in March, that integration expanded to include tokenized commodity perpetuals covering gold, silver, and oil. Institutional clients of Ripple Prime can now access on-chain perpetual markets through a regulated prime brokerage framework that sits within their existing compliance structure. This is the TradFi to DeFi bridge that institutional compliance departments have been waiting for. Now let me connect all four of these infrastructure developments to the supply picture assembling simultaneously. Bitnomial accepting RLUSD and XRP as margin collateral. The SEC reducing the RLUSD haircut from 100% to 2%. Mastercard settling credit card transactions on the XRP Ledger. Binance integrating RLUSD natively on XRPL. Ripple Prime bridging institutional capital to on-chain derivatives markets. These developments are happening simultaneously, with exchange reserves dropping 56% since October 2025, with whale wallets controlling 68.5% of circulating supply. And with ETF cumulative inflows at $1.374 billion, the institutional infrastructure is being assembled on top of a supply picture that has been systematically compressed over the past 8 months. Now let us talk about the standard chartered price math in this context. Jeffrey Kendrick's base case of $2.80 by end of 2026 assumes $4 to $6 billion in ETF inflows post-enactment. His bull case of $8 assumes $10 billion. But those models were built before Bitnomial accepted XRP and RLUSD as margin collateral, before the SEC reduced the broker-dealer haircut to 2%, before Binance natively integrated RLUSD on XRPL, before the Mastercard credit card pilot went into production testing. Each of these infrastructure developments increases the addressable institutional demand for XRP and RLUSD beyond what the ETF flow models capture alone. The $4 to $10 billion ETF inflow assumption is the floor, not the ceiling. When you include the institutional demand created by regulated derivatives margin, broker-dealer balance sheet expansion, payment network settlement, and prime brokerage access. Now I want to talk about what most people in this community are getting wrong right now. XRP is holding near $1.45, the institutional infrastructure that positions XRP at the center of regulated derivatives markets. Payment network settlement and prime brokerage is already live and being expanded, and the retail market is watching a sideways price and asking when something is going to happen. Something is already happening. Bitnomial already made it happen in November of 2025. The SEC already made it happen in February of 2026. Binance made it happen in February of 2026. Mastercard is making it happen right now in production testing. Ripple Prime made it happen in March of 2026. The retail market is looking at the price chart and waiting for the signal. The institutions are not waiting for the signal. They are building the infrastructure. And the entities that move 68.5% of circulating supply into private custody already understand what that infrastructure means for the asset they are holding. So let us zoom out and see the complete picture assembling right now. Bitnomial, first CFTC-regulated clearinghouse accepting RLUSD and XRP as margin collateral, already live. SEC reduced broker-dealer RLUSD haircut from 100% to 2%. Binance natively integrated RLUSD on XRPL with direct trading pairs. Mastercard settling Gemini credit card transactions on the XRP Ledger in production testing. Ripple Prime, bridging institutional capital to on-chain derivatives through Hyperliquid. ODL live in 90+ countries on top of this infrastructure. Exchange reserves down 56% since October 2025. Whale wallets controlling 68.5% of circulating supply. ETF cumulative inflows $1.374 billion. Standard Chartered base case $2.80 and bull case $8 on assumptions that underestimate current infrastructure deployment. And the Clarity Act sitting in the full Senate waiting for 60 votes and a July 4th presidential signature. The infrastructure is not coming. It is already here. If this analysis changed how you are thinking about the institutional infrastructure assembling around XRP right now, hit like and subscribe. I drop deep dive breakdowns like this twice a day to keep you ahead of the move.